Welcome to the deep dive. You know that feeling when you're looking at the crypto market and it's just overwhelming, information overload, right?
Absolutely. News, noise, it's everywhere. Hard to know what really matters.
Exactly. So today we're going to try and cut through that. We've got an internal update from us here at Digital Frontier Company.
Yeah, our latest analysis, we're going to dig into what our team sees as the key forces shaping the market right now.
Okay, so this is based on our recent internal newsletter, right? Looking at everything from liquidity to, well, how traders are actually feeling.
That's the one. It's pretty data heavy, trying to get beyond just the headlines and see the underlying currents.
Great. So for you listening, the goal here is to get a clearer picture, the drivers, the opportunities, and maybe the risks to watch out for. Let's dive in.
Some good.
All right, so the analysis starts with something called the macro dashboard. What exactly is that? How does it work?
Think of it like a control panel for the market's health. We track different key factors, liquidity, sentiment, technicals, that kind of thing. And we assign weights to them and then use z-scores to see how unusual the current rating is compared to its history.
Right, z-scores. That's like how many standard deviations away from the average something is. Tells you if it's high or low historically.
Exactly. Helps us spot the outliers, the things that are really driving the market conditions right now.
Makes sense. So what's flashing green or maybe red on this dashboard currently? What's standing out?
Well, the big theme, honestly, is liquidity, money flow. That's really popping on the dashboard.
Okay, let's break that down. What specific liquidity factors are looking strong?
First off, the Fed's quantitative tightening, or QT, they've actually slowed the pace down, you know. The roll-off is now $5 billion a week.
Right, they tapered the taper, basically.
Yeah, and that slower pace is actually adding to dollar liquidity, relatively speaking. We've got that at a plus 1.39 z-score. It sort of provides a baseline, a floor.
Interesting. So less tightening equals more liquidity in a way.
Right.
What else contributes?
Then there's what we call net USD liquidity. This looks at things like the Treasury drawing down its cash balance and money coming out of the Fed's reverse repo facility, the RRP.
The RRP draining.
Yeah, both those things are pumping dollars into the system, too. That's also showing a plus 1.39 z-score. Our guys internally are saying the fire hose is still definitely open.
Okay, so plenty of dollars sloshing around domestically. How does that compare globally?
That's another big one. Our cross-border GLI, the Global Liquidity Index, just hit a new cycle high. We're talking $176 trillion.
Wow, $176 trillion.
Yeah, huge number. The z-score there is plus 1.41.
Yeah.
The analogy we keep using is liquidity is the tide. When it rises,
Lifts all boats, potentially.
Yeah.
And are we seeing that tide flow into crypto specifically? What about the ETFs?
We are seeing a resurgence there, actually. Spot Bitcoin ETFs saw about $580 million in net inflows over just 5 days recently.
Okay, that's a decent number.
It is. Pushes that factor to a plus 1.000 z-score, suggests renewed demand, maybe institutional, maybe retail, coming back into the space through those regulated channels.
All right, so liquidity picture looks pretty robust both globally and flowing into Bitcoin ETFs. What about the market's internal mechanics? The microstructure bucket.
Yeah, so here we look at things like liquidations, you know, when leveraged traders get wiped out.
Forced selling.
Exactly. And the data suggests we had a leverage reset. Some of the froth got cleared out. But what's interesting now is the heat map skew.
Heat map skew. Explain that a bit.
It's basically looking at the order book where the buy and sell orders are clustered. Right now, it's skewed towards more buy orders sitting below the current price compared to sell orders above.
Okay.
Which can be seen as a contrarian bullish signal. Like there's underlying demand ready to step in on dips. That gets a pretty high score, plus 1.50 odds.
So leverage fleshed out and potential buyers are waiting. That sounds constructive. Now, how are people feel? What's the sentiment look like?
Sentiment. That's another fascinating piece right now. It's basically at maximum fear.
Maximum fear.
Yeah, we look at multiple indicators, things like the AII Investor Survey, the CNN Fear and Greed Index, how much exposure active managers have. They're all hitting multi-year lows. Some readings are like levels not seen since the 08-09 crisis.
Wow, that's extreme.
It is. The z-score is plus 1.20. But our take on this often is that this kind of extreme fear can be a springboard, not a cliff.
Right. The idea that when everyone's already terrified and sold, there's not much selling pressure left. Peak pessimism.
Precisely. It can often mark a turning point or at least a near-term bottom.
Okay, that's a compelling contrarian angle. But it can't all be positive signals, right? What are the main negatives or risks the dashboard is flagging?
No, definitely not all positive. There are key headwinds. The biggest one comes from the macro regime indicator, which uses analysis from 42 macro.
Okay, 42 macros GRID. What's that showing?
It's still signaling a deflation regime, and that gets a negative 1.00 z-score. Deflationary environments are typically risk-off, right? People hoard cash, avoid risk assets.
Yeah, falling prices, slowing growth. Not usually great for things like crypto. So that's a significant counterweight.
It is. And then there are the technicals, looking purely at the price charts.
What are the charts saying? Bitcoin reclaimed $91,000, didn't it?
It did, but despite that bounce, we still see what chartists call a distribution structure. Suggests sellers might still be active, or there's overhead resistance. That's a UNIS 0.61 z-score.
So the price action looks better, but the underlying pattern isn't fully bullish yet. Any other drags?
There's also a risk metric we track, risk PMPT downside deviation. It's basically looking at the potential for sharp drops.
Okay.
And the negative skew there, the risk of larger than normal falls, is still wider than it was after the immediate COVID shock. So tail risk is still a bit elevated. That's a mild negative, megas of 0.25 Zs.
Got it. And there's an other factors category too. What's in there?
Yeah, that's kind of a catch-all. Includes our own crypto bubble burst index, Google search trends for crypto terms, moving average crossovers, stuff like that.
And how's that looking?
Right now, that bucket is pretty much neutral, not adding much signal either way.
Okay, so if you weigh all these positives, especially liquidity and sentiment against the negatives like the deflation regime and technicals,
Sure.
what's the final score?
The overall composite score comes out to plus 0.62 sigma. That's standard deviations again.
Positive 0.62. And how does that compare historically?
It's actually the highest reading we've seen since last November. So the overall tilt is definitely positive, largely thanks to that strong liquidity picture overpowering some of the negatives.
Right. Liquidity seems to be the dominant theme. Now, looking just at the most recent changes, say over the last week or so, what were the key shifts that led to this higher score?
There were about 5 main things that stood out in the latest update. First, as we mentioned, that global liquidity index hitting $176 trillion. That's a big confirmation of the rising tide.
Okay, the GLI upgrade. What else?
Second, the return of those Bitcoin ETF flows. That $580 million inflow signals demand is back after a bit of a lull.
Renewed ETF appetite.
Third, confirmation that the big leverage flush, those liquidations, seems to be mostly done. And that positive skew in the order book map reinforces that.
So the market structure looks healthier.
Seems so.
Right.
Fourth is that sentiment capitulation, hitting those extreme fear levels, again, potentially marking a turning point.
Right, the springboard idea.
And fifth, while that deflation signal from 42 macro is still there, its negative weight is being somewhat offset now by the sheer strength of the positive liquidity factors. Liquidity is just carrying more weight in the composite score right now.
Interesting balance. So liquidity strength versus macro regime weakness. How does this translate into an actual market outlook? Short, medium, long term.
Okay, so for the short term, say the next month or so, we're calling it neutral to bullish.
Neutral to bullish. Why the hedge?
Because of that conflict, right? Strong liquidity pushing up, but the deflation regime risk pulling down. So we expect maybe some choppy price action back and forth, but with a general lean towards the upside. Chop with upward lean is the phrase we use.
Okay, some volatility, but maybe grinding higher. What about the medium term, like 3 months out?
Over 3 months, the view gets more constructive. The thinking is that the ETF demand, plus the momentum in global liquidity, could build enough steam to potentially push Bitcoin back towards its all-time highs.
A retest of the highs within 3 months.
Yeah.
That's optimistic.
It's definitely constructive, yeah.
Yeah.
It relies on those liquidity and flow dynamics continuing.
And the longer view, 6 to 12 months.
Longer term, we're outright bullish.
Bullish. Why the strong convictions, further out?
Several factors. One is what we're calling the triple put. Potential support from, policy angles, maybe election year dynamics, the Fed eventually easing, Treasury actions supporting liquidity.
Okay, policy angle.
Plus, you have the typical post-halving seasonality for Bitcoin, which historically tends to be positive in the months following the halving event.
Right, the halving effect potentially kicking in more strongly over time. So based on this outlook, what specific price levels are crucial to watch for Bitcoin?
Key level on the downside for Bitcoin is $91,000. We'd see a weekly close below that as potentially invalidating the current breakout idea.
Yeah.
Need to hold above there.
Okay, 91K is the line in the sand for support. What about resistance?
The big psychological and technical level is $100,000. If we can get a solid close above that, the analysis suggests it opens the door to a potential move higher, maybe towards $120,000 a year, where there seems to be a sort of fair value gap.
100K breakout target's 120K.
Got it.
Yeah. What about Ethereum? Is it tracking Bitcoin or doing its own thing?
Ethereum's been lagging a bit, actually. We're watching its ratio against Bitcoin. Support for ETH-BTC seems to be around 0.045. Resistance is up near 0.057. The view is that ETH kind of needs to play catch-up. The catalyst could be the roll-up narrative, layer 2 scaling solutions, gaining more traction and driving activity on Ethereum.
So watching that ETH-BTC ratio, maybe around 0.057, for signs of Ethereum starting to outperform. Now, even with the bullish lean, there are always risks. What could derail this setup?
Yeah, absolutely critical to watch the risks. Number one is that macro regime flipping, specifically flipping from deflation to inflation.
Oh, that happened. What are you watching?
We monitor things like CPI inflation data, obviously, but also bond market volatility, the UVE index. If inflation really picks up steam again, it could force the Fed's hand, lead to higher real rates, and suck liquidity out. That's the main threat to the liquidity wins thesis.
Right. Inflation resurgence kills the liquidity story. Makes sense. What's risk number 2?
Risk 2 is the Fed itself backpedaling on the QT taper. If they decided for whatever reason to ramp up quantitative tightening again, that would directly negate the positive liquidity signal we're seeing now.
So keeping a close eye on Fed statements and actions regarding their balance sheet. And the third risk?
Third is geopolitical, mainly tariff re-escalation. Things seem relatively calm on the trade front. Now we called it a Liberation Day pause, but new tariffs could easily disrupt global growth and sentiment if that situation changes.
Okay, so inflation, Fed policy change, and trade wars are the key things that could spoil the party. Given all this, the outlook, the levels, the risks, how does this translate into actionable ideas? What's the playbook?
Okay, for different styles. For directional traders looking to bet on price moves, the bias is long, but with caution. Use that 91K level as a stop loss.
Right, manage the risk.
And maybe consider adding to longs if Bitcoin gets convincingly above $100.
Makes sense. What about non-directional strategies, carry trades?
For carry funding, yeah, things are looking interesting again. Funding rates have turned positive, so delta hedge basis trades, buying spot, selling futures, or vice versa might work. Also, the CME future spread is offering around 4% annualized right now, which could be attractive for some.
Okay, so basis trades and CME spreads are back on the menu potentially. How about options?
On options, the analysis highlights that 90-day calls, specifically the 25 delta ones, look relatively cheap compared to history.
25 delta calls.
Okay.
So out-of-the-money calls.
Exactly. They have about a 25% chance of finishing in the money. Because they're relatively cheap, it might be a good way to structure bullish bets, maybe using risk reversals targeting that $120 K level, without laying out too much premium.
Interesting. Using cheap calls for upside exposure. Lastly, what about altcoins?
Alts are definitely lagging Bitcoin right now, that's clear. But historically, the big altcoin rotation often starts about 30 to 45 days after Bitcoin makes a new all-time high.
So not yet, probably.
Probably not yet. The advice is basically keep some dry powder ready, be patient, and wait for confirmation that Bitcoin is leading strongly before rotating heavily into alts.
Patience on alts. Keep some cash handy. Got it. I know the newsletter also includes a chart of the week. What does that show?
Yeah, it's more for visual reference. For those who get the full report, it shows the dashboard with all the Z-scores laid out and also the curve of the global liquidity index over time. It just helps visualize the data we've been talking about.
Cool. Visuals always help. Okay, so let's try to wrap this all up. What's the single most important takeaway from this digital frontier analysis right now?
The bottom line is pretty clear from our team. Liquidity wins until the macro regime changes. That's the core message.
Liquidity is king, for now.
For now, yes. The composite score is high, sentiment is washed out, which is often bullish, and you have those potential policy tailwinds, the three puts potentially armed. It leans towards upside.
What?
But the key missing piece is that macro regime shifting away from deflation according to 42 Macro's framework. Until that happens, there's still that underlying risk. But because liquidity is so strong, the view is that dips are likely buying opportunities for now.
Okay, so watch liquidity, watch the macro regime signals very closely, especially inflation indicators. That seems to be the crux of it. A really fascinating look under the hood.
Yeah, it gives a structured way to think about the different forces at play, rather than just reacting to headlines.
Definitely. So for you listening, maybe think about this. How does hearing this kind of institutional level breakdown change how you see the crypto market today? Are there specific signals from this analysis, maybe global liquidity, maybe ETF flows, maybe those sentiment extremes that you'll be tracking more closely now?
It could be worth digging a bit deeper into some of these concepts, like how global liquidity actually works or what drives those macro regime shifts.
Absolutely. The landscape is always shifting, right? And understanding these deeper currents, like the ones Digital Frontier is analyzing, can hopefully give you a bit more context and maybe empower you as you navigate the market. Thanks for tuning in to The Deep Dive.